That's where health was for a while, right? So were you in an old exam room or something? Oh yeah. Yeah, and I keep asking them. Then some people moved out.
My God. He definitely who is it, man? Yeah.
Eddie Miranda.
Thank you.
Discussion.
Glad you came by.
Well,
I'm sorry?
I didn't opine on
No, it's just, just for the,
very much
he's the,
our watch list.
what do you call it, the legal advisor.
Vocal during that, I tried not to be vocal during that.
Him, and then there's another
That's
one also.
really, I want you guys to do that more than,
But I can't remember the name.
Anytime we can spread.
He,
More diversity.
Is that guy who shows up occasionally?
yeah, he shows up more in the conference room.
Okay.
but AB, I don't know. I like them, but I'm also concerned.
I think I summed it up right. I think I summed it up right. You know, they're optimistic because they think they're coming up.
He's with Gordon Davis and Johnson.
Okay.
And Shane.
And to a large degree, I do believe that. I don't know. City manager has
Rick Lestry up there.
Good morning, everyone. Good morning. This is a regular board meeting of the City of El Paso Employees Retirement Trust. Today is Wednesday, July 16, 2025. The time is 8:32 a.m. and we do have a quorum. Would everyone please silence your electronic devices so as to not to disturb the meeting? Thank you. Please stand for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. You may be seated. Notice to the public, all matters listed under the consent agenda will be considered by the Retirement Trust Board to be routine and will be enacted by one motion in the form listed on the agenda. There will be no separate discussion of these items unless members of the Retirement Trust Board or persons in the audience request specific items be removed from the consent agenda to the regular agenda for discussion prior to the time the Retirement Trust Board votes on the motion to adopt the consent agenda.
Motion to approve?
second.
We have a motion by Mr. Rimka, seconded by Ms. Hamlin. It does require polling. Ms. Valdez? Ms. Brascala? Mr. Kerr?
Aye.
Ms. Hamlin?
Aye.
Mr. Rimkus?
Aye.
And Mr. Peña? Motion passes. Going on to item 7 of the regular agenda. Discussion and action regarding the Treasurer's Report for the month ended June 30th, 2025. Louis Meyer from the Office of the Controller will be presenting.
Good morning.
Good morning. Statement of net assets available for benefits contains the assets, liabilities, and net assets available for benefits at June 30th. It's a statement of evaluation of assets and liabilities at a specific point in time, each line representing actual amounts, except for investments, and investments is an estimate of what the portfolio was worth on June 30th. Total cash and investments, 1,026,000,000 approximately. Below that, receivables are amounts owed by others to the retirement trust. That totaled approximately 2.6 million. In the lower section, liabilities are amounts owed by the retirement trust to others and total approximately 707,000. Taking total assets minus total liabilities equals net assets available for benefits of approximately 1,029,000,000. Statements of changes in net assets available for benefits relates to the flows that occurred during the fiscal year. The left-hand column represents the 10 months of the current fiscal year. At the top, total receipts were approximately 52 million, averaging 5.2 million per month. Below that, the investment income section, net investment income was approximately 61 million. Combining the two, total net additions, approximately 113 million. In the lower section, deductions, benefits paid to retirees totaled approximately 69 million or 6.9 million per month. Refunds were approximately 4 million. Total deductions, approximately 75 million. Total net additions less total deductions results in a net increase for the 10 months of approximately 38.5 million. Adding that amount to the beginning net assets available for benefits, and we arrive at ending net assets available for benefits of approximately 1,029,000,000. The quarterly statements of changes in net assets available for benefits, we have the first month of the fourth quarter in the left-hand column and the prior 7 quarters. Highlighting some of those amounts for the month of June, contributions approximately 5.4 million, net investment income of approximately 24.8 million, total addition 30.2 million approximately, benefits paid to retirees for the month of June approximately 7 million. The total net increase for the month 22.4 million approximately, and we again arrive at net assets available for benefits of approximately 1,029,000,000. The investment income analysis page has the cumulative for the year to date in the left-hand column, and then each of the months in the fiscal year to its right. Realized gains for the 10 months were approximately 87.2 million. Unrealized losses approximately 30.6. In the lower section, we have the calculated returns. The return for the 10 months was 6.21%. Calculation taking the net investment income as the numerator and an average of the net assets available for benefits as the denominator. Trust has as its annual target 7.25%. 10/12 of that is 6.04%. First chart is a time series expressed in millions, 3 fiscal years. The orange bars represent the cumulative target in each fiscal year, and the blue bars represent the cumulative actual. The next chart is a time series expressed in percentages, same 3 fiscal years. Again, orange bars representing the cumulative target in each fiscal year, while the blue bars represent the cumulative actual. Refunds and administrative expenses, fiscal year 2018 on the left through 2025 on the right. Benefits paid to retirees, same fiscal years, 2018 on the left through 2025 on the right. The yellow portion above fiscal year 2022 representing the 13th payment. There is a estimate of the annualized amount for the current fiscal year at the bottom. Net assets available for benefits, each point representing a point in time, each at the end of each month in the continuum. The retiree population as of June 30th by age bucket and then further divided by gender. And the amounts paid to the retirees for the current fiscal year displayed by age bucket.
Questions? Comments? I will say that rate of growth, I forget which slide it's on, but the benefit payments from where we were a few years ago to only be going up to 82 projected, 82 and a half is good to see that moderating a little bit. Okay, thank you very much, Louis.
Thank you.
Okay, going on to item 8, discussion and action regarding the receipt of an investment manager report from Mellon Investment Management. Brian Hawk and Ted Baer will be reporting.
Excellent. Good morning, everyone.
Good morning.
Just wait for this to come up here. Great. Well, it's nice to be here with all of you. My name is Brian Hawk. I am a relationship manager located in Pittsburgh. I work for BNY Investments in Mellon. Mellon is the dedicated index manager for BNY, and we manage 3 index funds for the city of El Paso. Okay. We've had a long-standing relationship with the city of El Paso, a little over 30 years. So thank you very much for your business, your partnership. I work closely with Mr. Ash and Adrian. They're great to work with, and we have a great working relationship. I'm going to start off by giving a quick Mellon overview, talk a little bit about the firm, the assets, the team, and then from there I'm going to hand it over to Ted to go over the performance and characteristics of your 3 index funds. Please let me know if you have any questions. But looking at slide 5, BNY is the largest global custodian in the world, $53 trillion in assets under management. With that said, we have BNY Investments, which manages $2 trillion in assets under management. So Mellon Indexing is one of them that makes up to $2 trillion. We also have a number of investment boutiques, Newton, Insight, Walter Scott, that make up the $2 trillion of assets under management. And if you look at Mellon, and again, these numbers are through 3/31. We were still finalizing 6/30 numbers. $493.4 billion in indexing assets under management. Kind of moving, this is a snapshot of asset class, investment type, and client type that we manage, moving from left to right. So we manage a variety of money, and we do this for the city of El Paso too. Non-U.S. equity, U.S. equity, fixed income, and we also have some balanced strategies, which is a combination of equity and fixed income. On the investment side, separate accounts, which hold physical securities. Then we have bank collective funds, which you are a unit, you hold units of the collective fund. We also have a number of sub-advised accounts or relationships, and also we have sub-advised BNY Mellon, or BNY ETFs. And then far right, we manage money for defined contribution, defined benefit, sovereign wealth central banks, intermediaries, and also we have another bucket which falls under money such as nuclear decommissioning trusts. Slide 7 is our Mellon Index investment team, and just wanted to bring up 2 things. We have offices in San Francisco and Pittsburgh. The decision was made earlier this year to close the San Francisco office and move the headquarters to Pittsburgh. The reasons for this is Pittsburgh is a strategic location. BNY has a big presence in Pittsburgh, asset servicing. We have a number of people there. But the other big thing, it's a cost savings. It's not a cost reduction, meaning that it's very expensive to do business in San Francisco. With the real estate and things that have changed. BNY still has a presence in San Francisco, but the Mellon indexing will not. So everything is moving to Pittsburgh. And then the other reason is index vendors. When you have multiple locations, MSCI, Russell, it's getting expensive. These different vendors are charging you for different cities, so San Francisco and for Pittsburgh. Okay. With that said, on the far left side, Stephanie Hills, Managing Director, Head of Indexing. And then if you look two below is Nancy Rogers. Nancy's Head of Fixed Income Portfolio Management. She just retired as of June 30th. Nancy was with the firm for 38 years with different roles and responsibilities with BNY. So Marlene Walker-Smith, who is the Head of Equity, is now going to be the Chief Investment Officer. Marlene has been around for 30 years, has a lot of experience in different roles, and she's going to be overseeing both equity and fixed income. Okay, we have a great team. You can see on the far right, portfolio managers, we have team leaders, and we have a very experienced and structured process for managing index funds. When we manage index funds, we're not trying to take active bets or active risks. We're trying to track the benchmark as close as possible. So, and Ted's going to go over your index funds to show you the performance and characteristics. Any questions before I hand it over to Ted? Okay, thank you.
Good morning, everyone.
Good morning.
My name is Ted Baer. I'm the Senior Investment Strategist for Mellon. It's my pleasure to be here today to talk about the 3 index funds that we manage on behalf of El Paso. So I will start with the SL Stock Index Fund. This is our flagship S&P 500 index fund. I'll focus on the 1-year performance returns in the lower left corner of this page. We apologize, there's only 2 decimals on this page, but going out to 3 decimal places for the year, the S&P 500 returned 15.164%. The fund itself returned 15.155% and did trail over the period by 0.9 of a basis point. Breaking that 0.9 of a basis point down into the factors that drove performance, securities lending added 0.6 of a basis point to the fund's returns. Composition differences, or the tiny differences between our holdings versus the index, added another 1.4 basis points. Against those 2 positive factors, fees and expenses were negative 2.3 basis points, and cash drag in futures, another negative 0.6 of a basis point. This page shows how the characteristics of the portfolio. As Brian mentioned, our goal is to closely track our index for the S&P 500, given that it's a highly liquid collection of securities in the U.S. We use a full replication approach, meaning that we're going to hold all the securities in the index as closely as we possibly can to their index weights in the fund. I will draw your attention to the fact that there is 1 additional stock in the portfolio as of June 30th. That is due to 1 company in the index spinning off a portion of their business into a brand new company. That company is not part of the index. As that transaction was in process at the end of June 30th, once it settled in July, we liquidated that position. So you would see 503 securities the following day. The second portfolio is our All Country World Index X US IMI fund. As you can see, again in the lower left, the performance for the index was 17.826% for the year. The fund returned 18.092% and outperformed by 26.6 basis points. And the several factors that contributed to that 26.6 basis points, tax withholdings. So the fund's ability to recoup some of the taxes paid on overseas dividends added 37.1 basis points to the fund's returns. Closely related to that, we do need to accrue for potential capital gains on Indian securities. That subtracted 4.5 basis points for the year. Securities lending added 2.7 basis points for the year. Composition differences added 1.7 basis points, and fees and expenses negative 9.7 basis points. And cash drag and futures accounted for the remaining negative 0.7 of a basis point.
Just real quickly there, so we're paying you to index and you're providing above index returns for us.
It's a factor of,
Yeah, yeah.
of that benchmark,
Thank
correct?
you for outperforming the benchmark and, and charging us a minuscule fee compared to an active manager.
We don't really claim anything from that 37.1 basis points. It's just a factor. It actually reflects the custodian's ability to recover those dividend taxes.
Thank you.
The following 2 pages outline the characteristics of the Aqua ex-US IMI fund. Just for reference, there are 46 countries in this benchmark between developed and emerging. It also includes small cap equities. There are over 6,000 securities in the benchmark. You'll notice that we hold about 700 fewer securities. Given the nature of this benchmark, the number of countries involved, as well as small cap securities, we follow a slightly different approach where we sample the benchmark. Just for reference, those 700 securities only account for 0.055% of the benchmark's market value. We do optimize the portfolio as an additional step to make sure that we're not introducing any other biases within the portfolio. The final portfolio is the aggregate bond index fund. For the year ending June 30th, the Bloomberg aggregate index returned 6.076%. The fund returned 6.08%, outperforming by 0.4 of a basis point. As this is also a securities lending fund, and a positive 4.6 basis points added to the fund's returns. Fees and expenses were negative 3.7 basis points, and then our remaining half of a basis point is due to minor factors such as pricing differences on mortgages and transaction costs. And then finally, the following 2 pages detail the characteristics of this fund. Again, you'll note over 13,000 bonds in this benchmark. One thing to note with fixed income is that, especially this index, not all these bonds trade, or if they do, they trade very infrequently. There's a lot of very similar bonds in the index. So the comparison I make is if you look at the S&P 500, there's only one JP Morgan equity in the S&P 500. There are over 75 JP Morgan bonds in this benchmark. They're all going to trade very similarly, so we don't need to own all 75 of those bonds. We're going to pick the ones that best match the risk characteristics of the overall portfolio. That's why you see that we hold just over 7,000 bonds, or about 53% of the bonds in the index. But if you look through the characteristics, we're closely matching those key risk factors: yield duration, yield curve exposure, sector exposure, and then credit quality exposure. Any questions I can answer on any of these 3 funds for you?
Anyone from the committee? Good discussion yesterday. Thank you all for answering our questions.
Thank you very much. My pleasure to be here.
Thank you. Mr. Ash, you have any comments? No? Okay. Callan? Thank you all very much.
Thank you very much.
Item 9, discussion and action regarding the receipt of a monthly performance report for June 2025 regarding the trust investments and related matters from Callan LLC. Alex will be presenting.
Thank you. Good morning, trustees. Good to see everyone. We have a very interesting update for you through the month of June. Interesting in a good way, and I'll get to that in a moment. You saw a hint from the Treasurer's report. A strong recovery continued, particularly accelerated through the month of June, and that has really helped the trust on a fiscal year-to-date target return basis. I will get to that in just a moment, but some of the big news drivers that impacted the month of June was inflation, reaccelerating upward a little bit to a level of 2.7% year over year. The month before it was 2.4. There is some indication that some of the tariff policy is starting to make its way into prices. That's more of a one-time type hit. But certainly the cost of some imported goods did go up over that period. Yet to be seen how big of an impact that will continue to play out through the summer and into the fall. On the other side of that, the labor market and the economy as a whole remains pretty resilient. Unemployment's at 4.1, full employment, generational lows continued, so that picture looks good. What that does is kind of puts the Fed in this continued wait-and-see position, right? Interest rates are going up, so they're not in a rush to cut. At the same time, labor market economy looks strong. They're not in a rush to cut. So it appears to be forestalling cuts. The expectation, both from the Fed guidance and the market pricing, is still for 2 rate cuts by the end of the year. So that's still the consensus. That's what's priced into the market. Certainly that could change if there's a big spike in inflation or things are reignited, but that's the state of affairs today. If you were to turn to page 2 on the screen, a quick check on the asset allocation. The one thing that is occurring, and we've been through this before over the last couple of years, is if you look at the private equity line, 17.5 relative to its target of 13 has again kind of grown into this overweight position, right? It's not going to move as quickly as the public market assets, particularly public equities, but it has certainly started to come back and really accounts for a lot of the recovery in the trust value, as we'll see in a moment. But it's grown overweight. So we've been here before. We know how to manage through this. Just to remind the board, it will have implications for rebalancing and potentially benchmarking that the committee is aware of and knows how to kind of manage through, but just something that has developed recently, want to draw to your attention to. Now that is offset by underweight allocations to most of the other asset classes. Now we can get into the, one more page on change in market values. So you'll notice, this is just for the month, the investment return column, everything's really in the black. So again, risk back on, particularly in equities, and most asset, or all asset classes, really contributing to the growth in the value of the trust. And then I think more interesting in our discussion was, if you look at the net new investment column, there were no cash transactions to raise money for rebalancing during the month, but there was activity within the private equity program. And you'll see these older vintage funds were throwing off cash, as we would expect. They're more in the wind down phase. The newer funds at the bottom, particularly Adam Street, is in the ramp up phase, so they're calling cash, money's going in there. The interesting one was this fund we call Passive 5. That's a secondaries fund. They're buying seasoned private equity opportunities already in the marketplace. It seems like you just inked the commitment deal really late last year, this year. You'll notice they're already returning capital to you. And that's great. That's a little faster than expected, but we'll certainly take that. That's great news. One of the benefits of having secondaries in the private equity program. So that's great to see. And then additionally, having built out this mature private equity program at this point, you can start to see how it becomes really self-fulfilling, that the older funds are distributing capital back to you at the same time the newer funds are calling, and those can often equal each other, and that's just a great position to finally have achieved over time with the private equity program.
Hey, Alex, I get that that's a good thing from a cash flow perspective for us, but what does that mean for our long-term returns in that? Because, private equity, you want it baked in the oven for longer. If we're giving them money last year, they're already returning to us. How are they having quick exits that we're not? Are we going to see a lower IRR because of this return of capital?
It may have an impact on the IRR, but it's going to have a really strong cash multiple, which is at the end of the day how we're gonna value them, particularly for a secondaries fund. It'll impact our pacing, right? So if that particular fund winds down quicker than anticipated, we may have to allocate more capital than we anticipated. But that's why we revisit pacing almost every year to account for stuff like this. This is more of, I would call, like, a market anomaly. They saw, if you remember earlier, I think it was in January, they saw an opportunity in the market. There was a lot of forced sellers at that time. A lot of university endowments were selling portions of their portfolio into the secondary market. They saw something, and they scooped it up and called almost half of your commitment right away, right? That caught everyone a little bit by surprise in a fairly good way. But so this particular vintage is progressing much faster than others. And again, that's another reason that we diversify across vintage years, because that was specific to that particular market environment at that moment in time. That's not to say that's going to happen next year or the year after, so.
Okay, thank you.
So now we can finally get into the return picture. I'm going to focus mostly on this fiscal year-to-date column. You'll see, particularly when we look at these S&P 500 index fund line here, really strong return, like a big resurgence in risk, materialized quickly. If you remember back in April, we were in a 20% market correction. We had a 10% sell-off in the span of 2 days. That was proved to be short-lived, and so far, fiscal year-to-date, up over 11%. That's great news. Small and mid-cap companies below that, positive but much lesser so, have struggled on a comparative or relative basis. These are higher leverage businesses, so the higher interest rate levels impacting them more, and also more exposed to the tariff ongoing question, right? So their return has been less, and that really accounts for the domestic equity composite lagging the benchmark. Because structurally, the trust has more allocated to small and mid-cap companies than does the marketplace today. And so that accounts for that little bit of drag. All told, however, this is a lot of the trust assets, and we're seeing strong returns here, so that's great. I think the more interesting story occurred outside the U.S., so we look at international equity. Your results up 13%. Over the benchmark. That's really coming from your sole active manager now, AeroStreet. They continue to hit the ball out of the park consistently, month after month, so that's been a great addition. And, international equity has lagged the U.S. for a long time. So there's been a nice, albeit short period in which the allocation has really kind of proved its worth, kind of diversified some of the weakness we saw in the U.S. market and really been a positive contributor. Now, to be fair, a lot of that gain in that market has come from the falling dollar. So the dollar has been quite weak this year for a number of factors, we can get into if there's interest. But if we were to just look as an example of what that return for non-U.S. markets would be in local currency, year to date, 9.6 through yesterday. So still good, but if we translate that into a U.S. dollar return, it jumps up to 17.9, right? So it's almost 10% higher when translated into U.S. dollars. That's because the U.S. dollar has fallen pretty precipitously this year. So that's a factor of investing in international markets. It's working in our favor so far this year. But just want to point that out, that has been one of the drivers of the outperformance of that allocation.
If I can, since you brought up the
Click
U.S.
your mic.
dollar, since you brought up the U.S. dollar, what's the likelihood going forward? Is it anticipated, with the geopolitical situation going on, that the dollar will maintain this position, or do you see a change coming about over the next, let's say, 6 or 8 months?
Yeah, okay, so over the longer term, we would tell you, and your investment managers who have exposure would tell you that, the expectation is it will wash out, right? We had been through a period of a really strong dollar for many, many years. Now it's given up some of that strength. I think if you take a really long-term view, it tends to net out. What's driving the weakness this year? A big part of it is certainly the tariff policy stuff. If that is resolved, you know, I think that could take some pressure off the dollar and it could, you know, come back or at least level. The other thing, of course, is the deficit question, right? So that's probably more of the longer on-term going issue. And then, you know, this whole thing about Fed independence has also weighed on dollar a little bit. I think that's more of a temporary effect as well. So some of these could be resolved and answered quickly and kind of relieve some of the pressure on the dollar. Some of them are more long-term structural. We don't expect it to continue to slide, you know, indefinitely further and further.
Thank you.
Alex, how is it possible for each one of our international funds to be able to tell what effect that currency differential has versus the overall return of each fund, the performance versus the dollar effect?
I think we can get that from the individual manager reporting and look at it in the investment committee meeting. We could bring that to the board if helpful. I think they can disclose that, they have that information. I think just more high level, the way for us as a body to understand that is to look at just the performance of the index, right? We can look at the index in local currency terms and US dollar terms, and then with that, by that degree, we can appreciate the magnitude that currency is having today.
Yeah,
At-
I just think, yeah, and maybe at the investment committee, y'all can discuss a thumbnail way to disclose the portion that is currency effect. Cause it's always muddied the waters in our international portfolio. It's like, well, the dollar's weak right now, so you're gonna see this. The dollar's strong, so you're gonna see that.
Yeah.
And it can mask the overall performance. So if there's any way to maybe, without getting too granular, that might be another metric we can add in.
I think it's usually
reporting.
broken out, like when
Is
the
it?
international managers come and report
Right.
to the investment committee in their reports, they break that
Right.
piece out of the return.
Same way that our
calculation.
indexers kind of did
Yeah.
today, where they talked about the attribution to what led to
Yeah.
that. But we usually get that update.
But I don't, yeah, I just don't know if there's an easier way to disclose it somewhere on your flash or something. And it may be an aggregate, you know.
Yeah, we'll definitely look into that. And yes, to Matt Kerr's point, when the international equity managers present, and they present an attribution, they have an added column, which is currency impact. Now, they don't technically manage around currency at all. They treat it as a kind of fallout of the process. And normally, it's not a huge driver at all. This year it is,
Right.
for the reasons that we highlighted. So that's why we're commenting on it. And we'll certainly discuss ways to maybe capture it, particularly in these types of environments.
Kind of reminds me of the way we used to track, you know, performance net of fees versus gross, you know, something like that. So anyway, appreciate it.
I think when I look at this, the one thing that really sticks out to me is the poor performance relative to the index of our domestic equity portfolio over all time periods. But how much of that would you say is due to individual manager underperformance or poor manager selection versus just the dynamics of the market and the domestic equity market being so concentrated in such a few names, and when you're trying to be a diversified investor, you're just going to underperform in that environment.
Yeah, that's a great question and point you made, is that most of that is structural and to a much smaller degree manager specific. Now, certainly there are some manager issues that we're addressing. You'll see AllianceBernstein, they are on your watch list now, and we are developing a plan there. But the longer term underperformance really stems from the strength of the S&P 500. And within that, that's the strength of big tech, AI, and a handful of names, right? Today, 10 stocks account for 40% of the S&P 500. So it's been a hugely momentum-driven market, a highly concentrated market. You have tremendous exposure there, but that's one of the questions the investment committee wrestles with, and we're contemplating some projects later this year. Do we want to shift more into large cap equity, that's taking a bet on that concentration. And that will at some point likely unwind, right? But yes, I guess in a long-winded way to answer your point, it's the structural makeup of the market. We have less in those 10 stocks than the market today, and most of that is driving our underperformance, as it is for active managers broadly. In large cap equity, virtually no managers can outperform the market. The market ranks in the top, decile, top 5% because it is so concentrated. And we want managers and our portfolio to be a little more diversified than that, but in this environment, that's been an opportunity cost against us. Does that answer your question? Okay. I did want to just quickly point out on two, this is a great time to remind the board, because we did discuss investment costs yesterday to some degree, and we just heard from Mellon that, today, 42% of the trust assets are in index funds with Mellon. And the cost of those index funds ranges from 1 to 3 to 5 basis points, depending on the market segment. So when you look at it that way, intentionally, the trust is very cost efficient in terms of how it's accessing the markets through the investment strategies. Quickly on private equity now, take these with a grain of salt. These are preliminary numbers. We don't have, the types of marks we do in the public assets. But if we do look at that fiscal year-to-date column, we start to get a directional sense of how this asset class has rebounded. And it is the best performing asset class on a fiscal year-to-date basis. So it's really had a nice turnaround that we think is going to, hold. And this, as I mentioned, at about 17-18% of your assets, is really powering kind of the comeback in the fiscal year-to-date return that we'll see in just one moment. But again, this is that type of asset class, very long-lived, takes some patience. This has been a couple years in the making, but we're starting to see it pay off. Fixed income, kind of doing its job. Yields have been volatile over the course of the year, moving up and down, so returns on a total basis have been somewhat muted, but positive, and really serving that kind of liquidity and safety for the trust as by design. Real estate is throwing off positive total returns. There is, evidence that it is coming out of the bottom of its longer-term cycle. And all told, this is what I was trying to get to, is the fiscal year-to-date return for the trust through the end of June, with 2 months to go, is now 8.1% estimated. Our target return for the fiscal year is 7.25%. That's your actuarial discount rate. So if you remember back in April, we were a long way away from that. And the guidance that the board was getting was we weren't likely going to hit our target rate of return this year. That can happen, certainly, given what the market's throwing at us. But every year we can hit that, very important for the funded status and the other knock-on effects there. So this has been a really nice market-driven turnaround. And just to put that in perspective, through the end of March, right, so the end of Q1, the fiscal year-to-date return for the trust was 0.49 positive. And in 3 months, it jumped from that to over 8%. So that's great news. We have 2 months to go. We're in a volatile year. I'm not sure what will happen over those 2 months, but certainly a nice recovery and really headed in the right direction. Longer term, those last two columns, that's 3 and 5 years, you'll see the results of 8.4 and 9.1 annualized, well in excess of the discount rate at 7.25. So all told, given kind of where we were at different stages this year, the trust is doing very well, both near term, long term. Happy to take any questions.
Mr. Ash, any comments from you?
Robert Ash, Executive Director. The comments made by Alex are point on. I remember telling the mayor, the city manager, the CFO, the idea of us hitting 7.25% this year, pretty minimal. It would cause you would have to have like a 15% return, and this was only a couple months ago, for us to get there. And sure enough, wrong as usual.
was in that
Market
boat with you.
rebounds. Market rebounds, makes me look, as usual, like a fool. It just, I never anticipated it, given the volatility of the market and the macro headwinds that the market was facing at the time. But it just goes to show you, if we made this back in 3 months, don't count our chickens now, because we got 2 more months to go, and it could slide the other way. So, real volatility here, but great to see. Very great to see. Wouldn't have expected it, but it's here, so we'll take it.
Can also make, I know we've had some discussions of going to adding a bucket of tactical, and I think had we done something, potentially we could have missed out on this if we'd gone more defensive back then. And so the market can sometimes move a lot faster than we can. Other comments, questions?
Better to look like a fool in this direction.
Okay, thank you.
So going on to item 10, discussion and action regarding the approval of an asset rebalancing plan as recommended by Callan LLC.
Great, thank you. And so, the investment committee discussed the rebalancing needs yesterday. A very straightforward plan, to add to the existing cash. We're proposing, a partial sale out of the ACWI ex-US index, one of the funds we heard from Ellen today of 10 million. That will be sent into the cash account to be used to meet benefit payments over the next 3 months, any potential unforeseen capital calls to the private equity program, and other needs. In consultation with staff, that should be enough to get us through the next couple of months before we revisit the rebalancing. But given where asset weightings are today, that makes the most sense as a source to raise cash. So that's the proposal before you, and we're happy to answer any questions.
If there's no comments, I have a motion. I move to approve the rebalancing plan proposed by Callan and recommended by the investment committee.
I'll second.
Okay, we have a motion made by Carl, seconded by Mr. Peña. It does require individual polling. Ms. Valdez?
Aye.
Ms. Prascala?
Aye.
Mr. Kerr?
Aye.
Ms. Hamlin?
Aye.
Mr. Repkes?
Aye.
Mr. Peña?
Aye.
Representative Canales?
Aye.
And Representative Fierro? Motion passes.
Thank you.
Great, thank you all.
On to item 11, discussion and action regarding the proposed budget for fiscal year 2025 through 2026.
Robert Ash, Executive Director, before you today is a proposed budget for the next fiscal year. We talked about this at the last meeting to some degree. We're bringing forward to you the budget with a couple revisions in the way that we format the budget this time. Adrian's has been working on this with the executive committee and myself, and we're gonna run through it this month. We're not asking for any action this month. It's for you to consider during the month. We'll provide an update next month and ask the board to approve the budget next month. We have some numbers that are tentative right now that'll be updated before next month. The CPI number, for example, we're getting information on some additional actuary costs that we might want to budget for, as well as some other costs that we're trying to finalize at this point. So this is but a draft, but it is a little different than what you've seen in prior budgets, so we want you to have the time to review it, ask questions, call myself, Mr. Sanchez, anyone on the executive committee. I'm sure will be able to help, but we'll be glad to answer questions in the interim period. If you see numbers that are alarming to you or you think need some justification. But at this point, we want to go through the presentation with you so that you have a better familiarity with what will be proposed next month. Again, numbers aren't finalized, but they'll be very, very close at this point. Mr. Sanchez.
Yes, thank you. Good morning. So just to reiterate, change in the way that things are going to look, but these are not new expenses that we have been paying out of our bank for years. They've always been there. We're just choosing to show them in a different way. So I just kind of want to set the stage there. I'll take any questions throughout the presentation, but I would recommend maybe if we can get through like maybe slide 4 before I start taking questions. That'll kind of set the stage as to what the changes are, and then I'll open it up there. So with that being said, all right, so this is the total proposed budget as it stands right now. We're looking at a 9.4% increase over last year. But again, that's due to some changes that we're implementing on what we're actually including in the annual budget. You'll see a large number there for investment fees. Traditionally, we have not put that in our annual budget. We're choosing to go that route now. And there's also some operational costs that we have not usually put in the budget. You've seen them on your agendas. They show up in our ACFR. They've always existed. We've just never put them in the actual annual budget. And so again, just a change in process. So those percentages that you're seeing, the percentage change, drastic, but again, this is nothing new as far as what we've actually been paying in years past. So you can see a big portion of what our expenses are still gonna be the payments to retirees. That's the biggest portion of what we do here. Again, we have no control over that, and I'll give you some more detail on how that's breaking down for FY26. As people retire, we take their applications. We have no control over who's coming through the door, but we have, as Mr. Studer pointed out earlier, we have seen a little bit of a stabilization on how that number has been growing over the last 4 years. So this is the overall budget. I'm going to go into some explanation as to how those differences break down. So to start, these are the new items. These are the items that we have not traditionally put into the annual budget, and I've put them in order from least to biggest. So the Xerox contract, as you may have noticed in your agendas every month, we put that cost in there. It's not something we typically have put in our annual budget. We would like to include that now. The actuarial fee is a contract agreement with Gallagher. That's the cost pertaining to the actual contract. And that varies year to year based on whether we're doing a full valuation or an interim valuation. This happens to be an interim valuation. So that's a contractual cost for Gallagher, or they used to be known as Buck, if you don't recognize that name. And then we have the audit fee. Again, that's from their contract. This is a contract with CRI to do the annual audit. We have the lobbyist fee. This is the second year that we're going to be paying to SGT, to the Schluter Group. That seemed to have been a success, and so we're continuing that agreement with them. The way that contract laid out is the same for this year, even though we're not going to have the state stuff going on per their agreement. That stays the same. Legal fees, so we have Mr. Miranda and Josh and his group. These are an estimate of what the legal fees have been. Custodial fee, so this is our bank fee, so this is the fee that we pay to BNY Mellon. And then we have our consultant fee, Callan, and then the largest portion of this one is the investment fees. Now, the investment fees, as we've mentioned before, this is not an actual invoice that we're paying and the dollars are coming out. Typically what the investment managers do, they net this from our actual investments. So that one is a little bit different, but nonetheless, it is an expense that the trust incurs, and we show it in our financial statements at the end of the year. Sure. Almost made it to slide 4.
Was that all you were going to say about the slide?
For the
Before
slide.
you move on. Okay. So I think it's important for the board to recognize, in addition, so all of these categories that weren't previously disclosed in the budget, to Robert's point, making this a lot more transparent up front in one place, what the true cost is to the fund is important. Additionally, the budget serves as our board authorization for the director to expend. And so not only is this more transparent, but it's allowing the board to authorize these amounts for these expenses, regardless of how the accounting plays out and how they specifically are paid or netted out. It serves two purposes, so I think this stands as a big improvement over what we've had in the past. So it accomplishes, I think, two goals.
If I could, just being the account that I am, it would be a lot more meaningful to me, I like the presentation, if you could have actual costs along with it, so that you're not having to inform us that normally we do pay investment fees of X dollars last year, so that we can just actually see the cost comparison from one year to the next, the actual.
I think
So
they're
in other
gonna
words,
be-
budget, but then, but wait, here's what we actually paid last year, so that I can see
I agree.
that last year our actual cost was $10, and this year we have a budget of $11. Okay, I'm going what up and up.
Okay.
Sure, I think that's a good idea, and we've got that.
Netting it out.
And in fact, any one of us could go do that based on what we have approved on all of our board meetings.
Budget doesn't actually.
One thing I did talk about with Adrian and Mr. Ash and Carl on the executive committee is if they spent $115,000 on legal fees last year, I don't want to give them $116,000, and then we have something come up in the middle of the year that's a small little issue, and they've got to come ask us for permission. We trust Mr. Ash to run the fund, and so I want to make sure we give him leeway so that they're not administratively burdened to worry about, well, hold on, it's now July and we need to ask for $500. That's a waste of all of our time, so I want to make sure we give them authority
Right.
and to have enough coverage, understanding they will finish under budget, and if they do see a forecast where, hey, look, we got hit with something and we're going way over, they're gonna come to us earlier rather than later to ask for an increase. But I do think it's a good idea. I just wanted to prep the board that when you see the legal fees, I don't know what it's gonna be. It may be 110, but my point was, give yourself enough buffer. Don't double what we've spent, but give yourself some room so that we're not micromanaging the budget and y'all are having to make a bunch of amendments during the year.
And point taken, and so that's, so I didn't show actuals, but that is how I went about formulating these.
Sure it is.
Of course, with legal fees, I did leave some buffer, so I'm not chasing the $10 at the end of the year. Most of these
And you
are,
will be reporting, is it monthly, the budget, the actual and the monthly and then the annual costs
so,
against?
right, so
Yeah.
if this is approved the way that we're proposing it, David and I will have some work to get some of these people set up as vendors through the city's accounting system. And so when the treasurer's report comes through, they have the adopted budget and what we've expensed there, you'll see them there now. So you'll be able to see what we're expending through that. And so most of these, they're round numbers, so obviously the legal fees isn't exactly $125,000, so I left us some buffer there, but not astronomical. I didn't double it, but that's a good point. Well, I'll in the future maybe show some actuals.
Mr. Ash?
Do you
Yeah,
think you
to-
can do that for, you said these are preliminary numbers, and then we get to vote? Do you think by the time we get to vote, you can show us what the actual was for, let's say, last year?
Sure.
Not
Yeah,
for
in
the
the August
current-
presentation?
Right, so
For
that
August.
way we say, okay, you're trying to create a budget of $330,000, let's say. And your actual number was, I don't know, hopefully 310.
I can do that. The only one that will look a little weird is probably Gallagher, since the actuals that I'm gonna be showing were for a full actuarial evaluation, so that one's not gonna tie, but that one's tied to a contract. So, the actual might not pertain as much there, but I can do that for legal. I'll do it for all of them, and I'll put the actuals and legal fees. So I'll create a table that shows the actual and what the proposed budget.
Thank you.
Mr. Ash?
2 points. One, these weren't included historically because they do vary. So I can't tell you whether you'll get a legal claim over the next year, like we got from the city at one time, that came out of the blue, that caused additional work, which blew probably a proposed budget out of the water. I can't tell you whether you hire an alternative manager that drives the fees up. I can't tell you in advance a lot of what these fees will be, and that's why we put them on the agenda in the past, but we're budgeting them now. So you need to allow some flexibility here in just the nature of the fees sometimes. The second thing is, once you approve this as part of the budget, you won't see them listed on the agenda every month for your review. So if you look at your agenda this month and you look at the bills that are on page 1, item 4, you'll see investment manager fees, you'll see legal fees, you'll see the Sluter Group, you'll see the Xerox copy. We'll take that off now because you've already approved the expense. And so that's the other side of this coin, that we're gonna give you the information and we can give you historical numbers. We have all of them. But once you approve the budget, you're not gonna be approving individual invoice items and payments and that kind of stuff, because you've given us the authority to do that.
And I
That's how
think-
city council operates. They don't approve payments every single month. They approve a budget and then departments go and.
And I
complete
would
those
assume we'd have some sort of reporting, though. I mean,
Yeah, they're still gonna,
right.
we're gonna get the monthly reports from Lewis every month that
Right.
have
So the
these-
expense would.
Yeah, they'll still be there, yeah.
OTC will give you, as part of the treasurer's report, a comparison of budget to actuals. And just like any other budget, some insurances hit all at once and some, equally throughout the year. But you'll be able to track it.
So we're just approving it in aggregate up front instead of individually along the way.
Correct.
We'll still get the reports on a monthly basis. We can even start, if next year we come back and we go, whoa, things were different, then we can start asking for a half-year update or something, but I don't wanna make additional work if.
Right,
if
and we'll
it's
always
not
have the
necessary.
invoices, if you ever
Yeah.
wanna see an invoice, we're not saying you can't look at those things. We just wanna make sure that everyone's on the same page going forward.
And I appreciate, Adrian, I know last time we got hung up as a board on the investment management fees. Those are by far the largest ones, and they're the ones that are most variable. But I asked you to order it this way to point out it's not just the investment manager fees. It's quite a few other things that have not been part of the budget. And so now we're approving that on the front end, hopefully. And I hope being more transparent on the front end as a policy-making board rather than, hey, every month we need to approve this payment. It's you're authorized up to X amount of dollars for these different
Right.
services.
Okay. So the next slide, these are more, I would say, maybe the traditional expense changes, except for one is a little bit different. So we have a contractual increase for PTG, that's our system that we use for our retirees, well, actually for all our participants. We have an increase in our PBI death verification contract. We've been using them for a couple of years now. Our former service was bought out by PBI. I think it seems to have been, so David and his staff do a great job of catching most of the people when they pass away. They're monitoring, obituaries, and they have their methods. But this has kind of verified those, whatever's caught during the week, because they send us at the end of the week how many people have passed away according to their databases. And so whether or not they do catch a new one or not, it verifies the work that David and his group are doing. Mailroom charges, those have continued to go up. The good thing is we can now have a process of how we're actually repaying the city for this, and so it's been a lot better than it was, I would say, maybe like 4 or 5 years ago. Material costs, everything's just gotten more expensive, so we just need some more money there for office supplies. We've always had $100 budget for long distance. We don't use that. I'm just taking that out. And then this is the one difference, something that through the EC that was suggested. So typically we only budget a portion of what the trustees are allowed to use for their travel. We're changing that process and we're gonna fully budget trustee travel. So, in the case that everybody decides to take trips, we don't have to come back to the board or move any money to do that. So that's a little bit of a change there.
And to encourage people hopefully to travel. I mean, we sit
Right.
here for a few hours on a monthly basis. If you're on a committee, you get a little bit more, but if you're not reading and working on the pension outside of that, it's hard to kind of, especially when you're new. And so I do hope if we have new trustees that they are traveling Luckily, we have Texpers here
Yep.
in a month, and so that's nice, but that's a real, it's kind of that immersion where you're talking pension for 2 or 3 days straight with other folks, and I think it just can supercharge your knowledge, and so I hope that by having the budget fully budgeted there, that people will be encouraged to travel more.
All right, and so the next few slides are just gonna be further breakdown of that overall number. So here's our what we're calling the administration budget. Again, shocking number that it's 305.5% increase, but again, that's because of the change in how we're doing things. So you'll see again that $4.3 million in investment fee is a large chunk of that increase, and then within that operations is those other items that I mentioned. Salary and benefits increased by 6.9%. So I have a slide that'll explain more on that. But this is just a breakdown of the overall increase minus the retiree payroll and the refunds. Again, just a different slice at that, just going back to FY24, how it's changed. And just a pie chart of same information. So digging deeper into the salary and benefits, this 9% increase in salary and wages. Most of that is due to, we budget a 3.5% cost merit increase for the staff. So we have a process for merit increases for the staff, and so traditionally that's been tracking at about 3.5% increase for employees. At the time that we put this presentation together, we were using a 2.5% CPI adjustment. We had a number that came in yesterday at 2.7. Again, that's not the number we use, so the number that we use will come out early August. So when you see this presentation again, I will have readjusted these numbers based on what the July CPI number is. And then the employee benefits have just increased due to the salary increasing.
What is the annual increase on your salaries, year after year after year?
So we'll get the CPI plus whatever merit increase, so it changes.
Percentage-wise?
Percentage-wise, so we're probably looking, around 5%.
Each year?
Yeah.
Okay. Is there any way you can show me the actual percentage increase from like 23 to now?
Sure.
For next time?
Sure.
Okay.
Yeah. And the reason that it shows a 9% increase for, compared to last year, one of the changes, part of what we've typically paid through BNY Mellon is a contractual agreement for the executive director that is now included in the annual budget. Other than that, it's just the CPI and the merit increases.
Hey, Adrian, real quickly, I assume not everyone has their evaluations at the same time, so do y'all budget for everyone to get their max, and then if they merit, if they don't, then it just finishes under budget, or how does that work?
Yeah, so, well, the max is actually 4%.
Okay.
So I'm not budgeting at the max, and then that also kind of that takes into account the timing of the year. So
Okay.
yeah, if I were to put 4%, that'd be
It'd be
full
more than
amount, yeah.
necessary, even if everyone got the 4%, because
Right.
they're getting it throughout the year. Understood.
Correct.
Got it.
All right, capital expenditures, no changes here. This current fiscal year, we haven't had to use this budget, but it's good to have. We've had some expenses that we've paid for the building. You notice that the parking lot has been updated, but none of them have reached the level of a capital expenditure. So again, as Mr. Suter has mentioned, it's good to have some of these budgets, even though we might not be tapping into them, so that we don't have to come back to you guys to ask for this. A couple years ago, we did have to use capital expenditures for some railing that we put in, and I think there was one other thing. But as the building is getting older, we are starting to notice things that are starting to, need some attention. And again, David's doing a good job of keeping a buffer to that, and the facilities committee, they have a list that they're working off of right now. So this is the travel budget. So if you notice,
What is that? Oh my gosh, sorry. I don't know what that is, but it just sort of came on.
That's better than an emergency alert, right?
Rise up. Okay, that's good.
so trustee adopted budget in FY25, you'll notice that we used to budget $16,000. So this is where that $20,000 increase is coming because we're fully budgeting the travel budget for the trustees. This year has been a little bit light on travel. As a staff, we didn't make it out to many things this year. There was just some bad timing for some of us. But the trustees, there's a couple of trustees that have made it out to a couple conferences, an NCPERS conference and a TexPERS conference. And we have gotten a lot of registrations for the El Paso TexPERS conference that's coming up. So that's actually coming out of this year's budget, even though it's not gonna hit until next fiscal year. But that's minimal, $25 for registration. All right, so this is a big chunk. So this is the retiree payroll. I'm increasing that budget by 3.5 million, a 4.1% increase. I have a further breakdown that that'll go into how this ties back to historicals. But I don't see that we need an increase in the refunds. It seems like that's been a good enough budget. We haven't had to come back to you guys for any of these line items for several years, so it seems like we're doing a better job tracking these things. And again, we leave a little bit of buffer, but not too much. These are pretty tied to what we're expecting.
Could you bring your anticipated actuals for this, like as Sarah was saying, of where you think we might end when we get to August? I realize that you'll have to forecast at least the last month.
For refunds as well?
For refunds as well, just so we can
Okay.
see what it looks like.
Okay. Yeah, refunds are tricky.
Yeah.
I would say and I'll bring the actuals, that's no problem.
And you can do it through whatever date, so we can
Yeah.
extrapolate. If we
Yeah,
want.
no, pulling the table is not gonna be, or pulling the data is not hard. At the very beginning of this fiscal year, I was actually thinking that we were gonna blow through the budget, because the beginning of this fiscal year, for some reason, again, we have no telling on when people are gonna come in and ask for refunds or terminate. That's nothing that we can control. It was high at the beginning of this fiscal year, but it's settled down, and I don't think there's any change that we need for this current fiscal year, and I think, again, we should be good for next fiscal year. This is a slide that we've been showing for several years now that shows how we've been developing the budget for retiree payroll. So again, as Mr. Studer pointed out, you can definitely see the drop off from FY21 on the percentage increase year over year. We've kind of stabilized around a 4% increase year over year. And so this is dollars, this is not people. Year to date through June, our retiree payroll was almost $69 million. We did cross that threshold of $7 million a month for retiree payroll. And this graph does not include any COLAs. This is just the monthly payroll without COLAs, because that would create some spikes that I don't want
So
as
your
part of my
projection here is 86, but you're budgeting 89? Is that right?
budget. I think that's 80, is that 88? Yeah, so I'm leaving myself a little bit of buffer, as we've done in years prior. But yeah, I'm not going exact to what the budget is. Sorry that.
Last month I had
86, yeah.
Yeah.
Yeah. All right, so this is just a recap of everything we've gone over. The overall budget, we're looking at a $101,363,158 budget, including all the new items. Just for reference, if we were to show the budget as we have traditionally, we would be looking at a 3.9% increase. A chunk of that would be that same $3.5 million for retiree payroll, and about $67,000 for salary, benefits, and operations without the new items.
Okay.
So at this point, I could take any more questions.
Questions? Comments?
Well, I'll ask, so when will you get a set of budget actual with the extra column?
So I'll have it for the next month's presentation, if
Okay.
at least. But if you guys want it beforehand, I can send that out. But I'll include that in next month's presentation when we actually come back to actually adopt the budget.
Would you like it before then, Randy?
Yeah, if you could
Okay.
before that,
All right, so I'll pull those.
I'd
Thank you.
appreciate that.
Mhm.
Thanks.
All right.
Okay.
Okay, so I don't think we need any action today. You've given us some administrative direction, but the adoption needs to take place next month, because that's the end of our fiscal year. So this budget will start September 1st, once it's approved. And again, take a look at it during the interim period. Call Adrian or myself, we'll be glad to answer any questions, and then we'll update for next month's presentation. Thank you.
Thank you, Adrian.
Item 12, discussion and action on the report of the executive director. Robert Ash will be reporting.
Robert Ash, Executive Director. Texpers, we think it's gonna happen pretty far from now, but it's really not. It's August 4th and 5th. So we're only a few weeks away at this point. Remember, that'll be here locally. It's very rare that locally they do have a conference. Texpers was good enough to come a couple years ago. They got really good reviews from the Texpers members that attended. We encourage them to come back. They are coming back. They'll be here August 4th and 5th. They'll be at the Civic Center. If you can attend any portion of it, please let David know that you'd like to register for the conference. Registration's only $25. Again, in our own backyard, we're certainly encouraging board members to go and staff. But again, contact Mr. Garcia if you haven't already, if you plan on attending. We are also currently reviewing applicants who submitted resumes for the positions of research assistant as well as the retiree benefit clerk. They'll be reviewed shortly as well. So we'll be conducting interviews in the next couple of weeks. That's ongoing. Again, we'll get someone in to fill those positions and move forward with that. We're using the city as a recruitment vehicle. It's listed on the city's website, and we're asking for like 100 at a time that we're reviewing. Our strategic plan calls for us to distribute a survey every year to board members, and in the past you've received those, and the executive committee's requested that we not distribute that annual survey this year. And the reason for that is the city will be assisting us with our strategic planning meeting scheduled for October 29th. The performance office, I believe, has agreed to assist us, and they may be contacting you to answer questions, kind of like a survey, before our October 29th meeting. And so, again, you won't be receiving it. That is part of our strategic plan, so we'll miss that part of it this year. But the reason the executive committee is requesting that we not distribute it is we think you'll be contacted anyway prior to the meeting to answer some board survey type of questions. So please save that date, October 29th, 9 to 1, lunch will be served, and we're looking forward to a good session on October 29th. That'll get here before you know it as well. And finally, we've been asked to present to the city's FOAC, and we mentioned this at the last meeting, but it was postponed. I think the date that I'm hearing about now is July 28th, and Adrian's gonna make the presentation with an updated version of what we presented to the mayor and the city manager and CFO a couple months ago. So again, that'll happen before next month, and it's just an information piece. I don't know what to expect from the FAC other than to receive the information, and that's it, kind of as an update. But with that's my comments, and I'm happy to answer any questions that you might have. Thank you.
Okay, so item 13 is for notation only, and then brings us to the open comment period, and we have no one signed up for the comment period. So item 14 is the executive session. Do we have a motion?
Motion to retire to executive session.
Do we have a second?
Second.
Okay, we have a motion made by Mr. Rimka, seconded by Mr. Kerr to return to executive session. All in favor?
Aye.
Any opposed? Motion carries. The board will return to executive session pursuant to the Texas Government Codes sections 551.071 and 551.072.
Thank you.
Item 14A, discussion and action regarding the performance evaluation of the executive director and authorized contract negotiations to extend the current contract. Item 14B, discussion and action regarding the annual performance evaluation of deputy executive director. Item 14C, discussion and action regarding approval and employment agreement between the City of El Paso Retirement Trust and Emilia Avila, and item 14D, discussion and action regarding the contract negotiations with Pension Technology Group.
take bribes. I have to run. Before you got there.
I don't know.
Everything cuts down to the, I
Yeah,
got
that's
another
the,
clock.
that's
Jump on
like
the
my
phone.
first-
But at least it's, I hate remote, but I love it.
Yeah, it becomes
I
a
live
habit
by it.
sometimes.
When we get, well, I guess not. I guess that would be the second week.
You want the motion?
So do we have a
Motion to return from executive session?
We have a motion made by Carl, seconded by
Rep.
Representative Canales. All in favor?
Aye.
Any opposed? Motion carries. So do we have a motion?
Do you want to read out the item numbers, David?
Sure. So we have a motion for item 14A.
I move to approve the annual performance evaluation of the executive director to include payment of compensation outlined in his contract and authorize the chairman and legal counsel to enter into contract negotiations to extend his current contract.
I'll second.
Who seconded?
Aye.
Oh, Mr. Peña. Okay, it does require polling. Mr. Kerr?
Aye.
Ms. Hamlin?
Aye.
Mr. Rimkus?
Aye.
Mr. Peña?
Aye.
Representative Canales?
Aye.
And Representative Fierro? Motion carries. Now, do we have a motion for item 14C?
I move to approve the employment agreement between the trust and Amelia Avila, who was hired as a benefit technician, and authorize the chairman to sign the employment agreement.
Second.
Motion made by Carl, seconded by Representative Canales. Ms. Briscala?
Aye.
Mr. Kerr?
Aye.
And Ms. Hamlin?
Aye.
Mr. Rimkus?
Aye.
Mr. Peña?
Aye.
And Representative Canales?
Aye.
Representative Fierro? Motion carries. Okay, the next motion for adjournment,
Motion to adjourn?
Second.
seconded by Representative Canales. All in favor?
Aye.
Aye.
Any opposed? Motion carries at 10:54 a.m.
Thank you, everyone, for your support.
Thank you.
Thank you.
With Gemini and Google Docs, you can summarize long customer call transcripts. From just one prompt, AI can help outline the most important info and suggest new ways for your business to provide support.
For more information about contests on this station, go to sunny999fm.com/rules.
We give you easy access any way you want to listen.
If you have a smart device, just ask to play this station on iHeartRadio.
Okay, playing more music right now.
El Paso's Sunny 99.9.